Hi guys, it's Burp here and welcome to today's exclusivity report. And today I've got for you a complete thorough analysis for a couple of timeframes of Bitcoin USD spot price registered on the Bitstamp exchange. Okay, this is the exchange that I always pick, so it's very important to keep consistency on selecting the very same benchmarks. Okay, because many different exchanges would actually get different data and different index kind of like information. Okay. So here, looking at a Bitcoin USD spot price on the weekly chart, where we're looking at an overnight kind of like a sell-off that broke down for the very first time the lows of $27,000 overnight, kind of like resulting in a follow through to the downside after the past week's close. Okay, the close which actually closed below the key threshold of 28,800s, which was validating my previous kind of like bounce scenario. Okay, and the bounce scenario kind of like failed with the close, with the yesterday's weekly close, where the weakness when the strength was showed there in there before, right? So this is definitely a clean violation of those strength signals kind of like registered in the past. Okay, and here we are basically retesting the most valid, the longest term, I think, benchmark reference price for Bitcoin, namely 200-week moving average. Okay, this is 200-week average, and this basically tells you, okay, this basically tells you about the fair price of Bitcoin accounting for the long-term standards. And here is what we can read, right? Historically speaking, whenever there was actually an attempt and retest of this 200-week average during this bull market cycle, right? You're looking at somewhat of reversal kind of like place, right? This is not to say by all means that we cannot skip and slip $1 lower, that is just the ultimate bottom and we're going to fucking vertical go right away from it. Right, I'm not saying that. Instead, I'm referring to the past data, okay, to let you position your kind of like your mindset toward observing 200-week average. It is just typically where the bullish reversal had taken place. Okay, and nobody knows the future. Nobody knows what this week's FOMC meeting is going to come with. You don't know what the Jay Powell chairman is going to tell you basically on their decisive points, regarding this rate hiking cycles. Perhaps they're going to accelerate the rate hikes even more, raising by 75 or 100 basis points, accelerating the tightening and collapsing, letting the markets collapse even more. Nobody knows that. Nobody knows the next moves from Putin and Russia, attacking the Ukraine, situation there, and nobody knows the future. Nobody has a crystal ball. However, the past performance, can definitely be a valuable source of information when trying to understand what may happen, in the past. Well, in the past versus the future, right? We can take the data from the past and to some level approximate and set our expectations for what may happen in future, right? So that we can plan according to those expectations and decide whether we are uh, on the right side of the trend or on the wrong side of the trend. And here, while looking at this overall consolidative period, right, we are talking about a sequence of, well, just a price action based, lows of 2021, highs of 2021 and half one, right, $65,000 in April, then 28,800s basically, or 28,600s, regardless of the perfect ideal numbers. It is just more of a zone that matters rather than a perfect ideal number. Uh, Here an overflow of right above $69,000, recent $26,000, kind of like a 25,500, with a strong bullish hammer, right? And after a couple of weeks of this low volatility, we got this volatility breakout to the downside yesterday amid the overall fears, and overall, I should say, uncomfortable um, market context on the broader scale, right? The stocks are opened heavily, breaching for the past support regions, dropping to the levels unseen in 2000 since 2020 levels, if I'm not mistaken. We're talking about everything basically crashing on the stock side, even defensive markets, which are typically considered safe place, in the difficult environment, difficult crash times and themes. Even defensive stocks are dropping, right? We're talking about cash as in the dollar and the 10-year yields or the long-term yields basically gaining in power against the risk on assets, literally taking a huge plummet recently. Okay, uh, all of these things concern, just to say that we have just reached the long-term benchmark, which historically had always brought reversals sooner than later. I'm not talking it's not going to be like a perfect touch and it's just going to reverse like in a second, right? Instead, it may kind of like just spend some time here, right? While historically speaking, there was not much weakness in the past below these levels, right? Even the March COVID crash, 2020, which was basically a price shock nobody could have predicted. You cannot predict the price. You cannot predict the next pandemic. You cannot predict, like I said, what Jay Powell is going to tell you on the FOMC meeting. In the hindsight, everything is obvious, but at the very time of making the decision, nothing is truly obvious. So we should always account for it, right? And definitely saying that it was easy or predictable, for the COVID pandemic, the market was overstretched, blah 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 blah. It's basically fooling yourself with a hindsight bias. So all those things concerned, we are talking about the main benchmark being basically retested. Okay, I'm not going to lie. Definitely, this overall extension for the market, to the downside has been really resulting in an overall 67% retracement of the peaks, a very heavily drawn down market of the highs. Okay, this is a heavy sell-off, and however, it's not heavier, okay, than what we had in 2019. And well, overall, the way I'm looking at it, is that uh, should there be somewhat of a more positive reading, more bullish reading on the FOMC meeting on this Wednesday, the markets can react proportionately to it. Remember that the market reaction to this, to the news announcements, to the news, to basically rumors spreading and discounted in the market, is proportionate to the difference between the expectations and the actual outcome, right? So the larger the outcome is against the expectations, the larger the impact is, and the larger the price shock. So there are very bearish expectations, right? Let's say for the rate hiking decision on Wednesday from the FOMC announcements, and there comes a little bit of more bullish, as in less hawkish and more dovish, easier monetary policy decision. This may result in a more of a bullish reaction and a twist in the market. However, if there is more, if the expectations are basically to come as softer than what is actually being prepared by the FOMC, and they're going to come up with higher interest rate hikes, than promised, than anticipated, then I think the market is going to take it as a very bearish sign that the conditions really require, such far-fetched, and far-reaching shifts in the monetary decisions. So this could come as a negative surprise to many, and the expectations are definitely getting getting closer and then bigger amid amid the basically rate hiking decisions coming on this Sunday, right? So the closer we get, the bigger anticipation, the bigger the volatility, and the volatility is always biggest in the biggest twists in the market. Even if we take it for the daily chart, right, and if we take it basically for for I'd say the volume weighted average price. Let's give it a shot. Okay, then the volume weighted average price anchored at a very high, okay, at the very high of 2021 peak of November 29. In the early November at $69,000. Basically, you're talking about the fair price of Bitcoin, which is reaching right now this period, this range of prices around $41,000, right? So 41,159 is the volume weighted average price anchored at the very peak of the market. So it tells you that accounting for the period from the peak, okay, from the all-time high of Bitcoin until now, the fair price of Bitcoin, accounting for the price and volume combined, is at 41,000, right? So it tells you that the very main conclusion with Bitcoin reaching its 200-day, 200-week average benchmark, it's heavily underpriced against its fair valuation coming from the volume readings. Okay, and even if we take it lower, you would see some repetitive patterns on lower time frames. But the main support is $20,000 from the past highs, 22 400s from the 200-week average, and and the rest is basically resistance, right? You're looking at a lot of resistance. Resistance is clustering here. Here, the inability to break through, okay, comes up with some clustering effect. So $33,000, $37,000, $38,000, the $41,000 right now. The broken support, in here remains a resistance for now. So there's a lot of resistive places. Okay. However, there is a lot of support. The main long-term support is already here, right? So just maybe, while nobody knows the future, it may make more sense, to to scoop some rather than to sell some in this context, at least in the short term, right? Uh, the conditions, the market, the sentiment is definitely terrible. This overall feels like some extreme capitulation going on. The biggest projects are literally right now reducing their staff by 20%. You're looking at some major issues with liquidity and the margin calls, coming to Celsius Network and other projects, right? So there's overall seems like the very end, and the more it does seem this way, the more and the closer usually gets to the very bottom, right? The very bottom of 2018 bear market was exactly when the biggest media stations were literally calling for the Bitcoin's death. Okay, you could read the headlines saying Bitcoin is dead and it's never going to recover. So the more of these you get, the more likely you're going to look at a reversal, right? So definitely not a safe environment. So you should account for it while planning your trades for now and perhaps avoid catching the falling knives.